Welcome back to the Deep Dive. Today, we're doing something a bit different. We're stepping past the usual quarterly numbers.
Yeah, we're going straight to the source, strategy-wise.
Exactly. We're diving into the strategic vision of BlackRock, looking at the remarks from Chairman and CEO Lawrence Fink after the Q3 2025 earnings call. Our mission here is really to unpack his playbook. Market strategy, how they think about acquisitions, and where they see growth coming from. No dense financials today, just the CEO's perspective.
And it's a good way to frame it because Fink's core message wasn't really just, hey, we had a good quarter. It was more fundamental.
Yep.
He was basically saying the results validate the entire BlackRock model. He pointed to things like the $205 billion in total net inflows.
Which is huge.
Massive. And that powered 10% organic base fee growth just in the quarter. He's arguing that's the proof that their big strategic bets are actually paying off now.
Okay, so the numbers are just like the evidence for the strategy he's been pushing. He kept talking about trust, relationships globally, and making bold bets before everyone else jumps in.
That's the key point. He specifically mentioned those high conviction themes they invested in, years ago. Things like ETFs, private markets, tech and data, digital assets.
Right.
These aren't just ideas anymore. He's saying they're literally the things driving growth and leading the conversations they're having with clients right now.
And the consistency backs that up, doesn't it?
Yeah.
That 8% trailing 12-month organic base fee growth hitting above target?
Yeah, that consistency suggests the underlying engine they've built is really working across the board globally.
Okay, so let's unpack that growth then, because the first thing that really struck me was just how broad it was. You hear BlackRock, you often think iShares, passive funds, right?
The usual suspects.
But Fink made it pretty clear this growth isn't just one story.
No, not at all. And that breadth is, I think, a really important differentiator for them. It's genuinely impressive.
So what were the drivers then, in Q3 specifically?
Well, he listed the top 5 contributors to that organic base fee growth. And it's like a real mix. You had systematic strategies.
Okay.
Private credit, which is becoming huge.
Right.
Digital asset products. Even their cash franchise, and then the whole business of portfolio outsourcing for general accounts.
That's quite a range. Systematic, private credit, digital cash, outsourcing.
Exactly. It shows they're not just reliant on one area. They're penetrating pretty deeply across a lot of specialized markets.
In that kind of range, that desire to offer, the whole portfolio solution, that seems to link directly to how they think about acquisitions.
It does. Think always makes this point. They don't buy companies just to have them operate as separate little shops.
Right. He calls it one BlackRock. The focus is always on full integration.
That's the goal. Yeah. Well, what's interesting is how they try to make that happen structurally. He gave the GIP and HPS deals as examples.
How so?
He highlighted that the payment, the consideration, it wasn't just a pile of cash. A large part of it was actually in BlackRock equity. And it's tied to performance milestones way out in the future, long-dated ones.
Okay, so they're not just buying assets or teams. They're trying to buy, alignment, essentially, making sure the leaders of the firms they buy have the same skin in the game as BlackRock shareholders.
That's the idea. You align the interests from day one.
Makes sense on paper. But how tough is it, really, to integrate these massive firms? Like HPS, you mentioned they just onboarded 800 people. That sounds incredibly complex to fold into one seamless operation.
Oh, it's definitely the core challenge, no doubt. But they seem to be moving pretty fast. Let's maybe look at the private markets piece first, starting with HPS.
Okay, the private credit acquisition. That only closed, 3 months before this call?
Yeah, very recent. But Fink was already talking about early successes. He indicated the integration is already helping them, especially with insurance clients and in the wealth management channels.
Right. Positioning themselves as the go-to capital partner for insurers. That seems key.
And crucially, doing it while staying, as Fink emphasizes, balance sheet light. They manage the capital. They don't necessarily hold all the risk themselves.
Got it. Manage, don't own.
Precisely. And when you look at the scale now, it's kind of staggering. You've got HPS bringing this $370 billion private financing capability.
Okay.
And that sits right alongside BlackRock's existing, over $3 trillion public fixed income business.
Wow. So they can basically offer clients, big global clients, the whole spectrum, public debt, private debt, all integrated.
That's the pitch. A complete credit solution, public and private, under one roof.
Okay, so HPS locks down private credit. Then there's GIP, Global Infrastructure Partners.
Yeah.
That gives them a huge footprint in infrastructure.
Exactly. And infrastructure is now being, supercharged by AI, right?
Absolutely. It's been about a year since they announced the GIP deal. What progress is Fink highlighting there?
Well, the fundraising muscle, for one. GIP's latest fund, GIP5, closed back in July and closed above its target, which was already a massive $20 billion.
$20 billion downside.
It's the largest client capital raise ever for any private infrastructure fund, period. It just shows you the demand. Infrastructure is hot.
And the AI angle. You mentioned that AI partnership, AIP.
Yeah.
The names involved are pretty heavyweight.
Totally global, yeah. You had MGX from Abu Dhabi, Microsoft, KIA from Kuwait, Temasek out of Singapore, all pouring capital into AIP.
Plus the tech giants themselves, NVIDIA, xAI, Cisco were mentioned as partners too. Why are tech companies getting involved in an infrastructure fund?
Because, well, think about it. The actual physical infrastructure needed to power this whole AI revolution. It's monumental.
Right, the data centers, the power grids.
Exactly. Fink threw out a number. He estimates $1.5 trillion is needed just for the core and shell construction of data centers.
1.5 trillion.
In the next 5 years alone, it's almost hard to grasp that amount of capital.
Just to put that in perspective for you listening, $1.5 trillion is roughly like building the entire U.S. interstate highway system all over again, adjusted for inflation, just for data center buildings.
It paints a picture, doesn't it? Infrastructure is basically the bottleneck for where AI can go next. And GIP, with its track record in huge projects like data centers, puts BlackRock right at the center of where all that global capital needs to flow.
Okay, this is where it gets, I think, really forward-looking. The digital frontier. Fink didn't just sort of mention tokenization. He called it one of the most exciting growth areas in finance today.
Yeah, he was quite bullish on it.
What's the actual strategic play he sees there? What's the opportunity?
He sees a big disconnect, essentially, a misalignment in the market today.
How so?
He pointed out there's something like $4.5 trillion of value already sitting in digital wallets. That's crypto assets, stable coins, maybe some early tokenized things.
$4.5 trillion.
Okay. But here's the problem, or the opportunity. If you're holding that value in a digital wallet right now, you generally have no easy way to access traditional high-quality investments. Think blue chip stocks, investment-grade bonds.
Okay, so the pipes aren't connected. You're either in the crypto digital world or the traditional finance world, digitally speaking.
Pretty much. So BlackRock's goal, their vision, is to basically build those pipes, to connect traditional finance to that digital wallet ecosystem.
So you could seamlessly move between assets.
That's the end game he described. A future where an investor never actually needs to leave their digital wallet to allocate efficiently. They could hold crypto, stablecoins, and get exposure to long-term stocks and bonds all in one place.
That's ambitious. But they are starting from a strong position, aren't they?
Definitely. They already manage the biggest crypto asset ETP that crossed $100 billion in assets under management.
Right.
And maybe less known, they're the largest reserve fund manager for stablecoins. They manage over $60 billion just for Circle's USDC reserve fund.
So they're already kind of like the plumbing or the bedrock for parts of that digital ecosystem stability.
That's a good way to put it. And having that foundation, that scale and trust, lets them push innovation elsewhere too. Not just digital. Look at iShares.
The ETF powerhouse.
Crossed $5 trillion in assets during Q3. $5 trillion. And record net inflows again, $153 billion.
Yeah.
The scale is just unprecedented.
But it's not just the sheer size of the passive stuff anymore, is it? He seemed to highlight the shift within ETFs.
Exactly. It's not just about index tracking volume. He pointed to the really rapid growth in their active ETF franchise that's over $80 billion now. And those digital asset ETPs we just talked about hitting over $100 billion from basically zero just a couple of years back.
So it demonstrates their ability to innovate and scale up quickly. Fink called it their innovation and scale engine.
Yep. And it's not just a U.S. story either. He made a specific point about Europe, said the European ETF market is at a real inflection point, meaning the growth is accelerating dramatically. Net inflows in Europe for 2025 hit $103 billion already. That's more than the entire record for last year. So it's a global acceleration.
Okay, so this constant theme of integration, public, private, traditional, digital, it all has to connect somehow. Which brings us to the technology platform.
The glue holding it all together.
Right. He mentioned they signed their first whole portfolio technology mandate. That sounds significant, like a validation of this whole integrated model.
It really is. Because this mandate apparently brings together their entire tech stack into one seamless offering for a client.
So that means?
That means Aladdin, which everyone knows is their core risk and portfolio system, but also Preqin, the big private market data firm they integrated, and eFront, too, which is another key platform often used for institutional portfolio management.
So it's not just, here's our public market tool. It's one single workflow covering both public and private assets.
That's the concept. One view, one workflow.
And this tech integration, this whole portfolio idea, it ties directly into their plans around retirement, doesn't it?
It feels like the ultimate endgame, yes. BlackRock's already a big player in retirement solutions, things like LifePath Paycheck,
which embeds lifetime income into 401ks.
Exactly. But the real potential game changer Fink sees is the regulatory push to allow more growth-focused private market strategies into those defined contribution plans, like 401ks.
Okay, this could be huge. But if that happens, if 401ks open up to private markets, the rules around fiduciary duty won't just disappear.
Not at all. That mandatory fiduciary standard will absolutely still apply. Plan sponsors, the fiduciaries, will still have to prove they did their homework, that they properly vetted these private investments.
Which is much harder for private assets than for, say, a public stock.
Yeah.
The data isn't as readily available.
Precisely. So if this happens, it instantly creates this huge compulsory need for much better data, better analytics, better reporting on private markets than what's widely available today.
And that's where their tech comes in.
That's the connection Fink made. He basically said this represents a large potential unlock for Aladdin and Preqin. The technology platforms don't just manage the assets. They become essential for compliance. They become the infrastructure needed to satisfy that fiduciary duty.
Wow. Okay, so the tech becomes almost like a regulatory necessity.
That seems to be the vision.
So, summing it all up then, Fink's concluding message was really one of pride in how everything's coming together, the integration of GIP, HPS, Preqin, connecting employees, connecting clients.
Yeah, he definitely projected confidence. He sees BlackRock as actively defining what asset management will look like next, building this really differentiated platform around that public-private model, all underpinned by Aladdin and the related tech.
A truly integrated vision.
Mm-hmm. And that leads us nicely into the final thought we wanted to leave you, the listener, with today. Fink really emphasized this point. If private markets do get allowed into 401ks in a bigger way, the need for robust data and analytics to meet those strict fiduciary rules will just explode. So thinking about that and everything we've discussed from Fink's remarks, what does it really tell you about the future role of platforms like Aladdin and Preqin? Are they just tools serving the assets anymore? Or are they actually becoming something more fundamental, like the essential legal and regulatory backbone of the investment industry itself? Are they becoming the gatekeepers of compliance? Something to think about.